What happens when somebody forgets the password?
Unlike traditional banking, there's no forgot my password button in crypto. Effectively, you could lock that forever. But I think the whole market, I don't necessarily think they fully understand genuinely if you lose access, really, there is no way back into this. There's no, we estimate there's 20% of all Bitcoin is lost.
How big is that risk?
People and banks not having expertise. I think it's really important to bring in expertise on the crypto side that start as crypto native, or also bringing in people who've worked in the traditional space.
Hi, Anthony. Welcome to the show. It's a pleasure having you here.
Thank you very much. Really looking forward to speaking to you.
Thank you. So the question for this episode, it is something that many of us think about, that it's basically crypto and safety. At this point in time, all digital assets are very hot at the moment. And then we have neobanks. I'm sure that many of them are considering shall we roll out digital assets proposition, that whether that is using stablecoins or launching a crypto wallet as such. Then when we talk to customers worldwide, then the customer sentiment is a little bit like, crypto is risky, it's not safe, my money can disappear. There's many thoughts in customers' minds when it comes to digital assets that basically are deteriorating trust. And it may be that this trust issue has been there since the beginning, but then 4 or 5 years ago with a crash of some exchanges and everything, like that trust has deteriorated over time. So as we as an industry see crypto racing, then we also need to think about trust. So it's a big topic. So I want to start with, given that trust is at the core of financial services, but in the crypto space, trust seems to be lacking. But there's companies like CoinCover, that CoinCover basically helps with this infrastructure to build trust. Can you tell us about CoinCover? Because I think mass market and many people in FinTech, we don't know about the services that companies like yours provide.
Yeah, definitely. A lot of people who don't know about what we do, because ultimately we sit in such a niche area, and that as we guess we'll talk through today, it's an area that still needs continued education of the importance behind it. But yeah, let me tell you a little bit about CoinCover. So we were founded in 2018, and since then we've established ourselves as the leader in the digital asset protection space, and backed by a number of strong VCs like Foundation Capital, DRW, and CM Digital. In our segment today, even though some of you may not have heard of us, we protect more on-chain business than anyone else. So we've got about 600 institutions today that we work with. Customers are the likes of Ledger, Fireblocks, BitGo, Robinhood, Bitso, many more. So these are really well-established names that I don't think people realize that we're protecting. And also we help these infrastructure providers and institutions and retail users mitigate against the loss of access to wallets, prevent fraud when it's sending on-chain transactions. So yeah, that's a little bit about us.
Cool. And then basically, I want to go deeper into the problem statement of why we need a company like CoinCover. So rather than talking about CoinCover first, I'm just going to talk about pain points that our customers may have. And it is a very long list of pain points that people have. So when we speak with customers, we have, security and price volatility. Those we could assume that are barriers to entry when it comes to crypto adoption. What is your take on, security, and what's the ripple effect that it may have on market confidence?
Yeah, I think security is critical, right? I think people often point to price volatility as a reason why crypto hasn't gone mainstream yet, which maybe there is an element to that. But I think security is a much bigger blocker, whether you're at institutional level or retail level. When I say retail level, like your friend down the road who just, I want to, but I hear all these scary stories and I don't want to participate in it. But if you make it less scary for me, then maybe I might participate in it. If people don't feel their assets are safe, they're not going to participate. I think for me, if you just look back at some of the major incidents over the past few years, the FTX collapse, very well publicized, and it wasn't just a business failure, it was a complete breakdown of trust.
Yeah.
Billions vanished overnight, even though it was more about fraud than hacking. The takeaway for most was money's not safe here. There's been things like the Ronin network hack, where I think it was like 600 million or something was stolen because of weak key security. Then the impact of that was it didn't just impact the Axie Infinity users. It really just sent shockwaves across the entire GameFi world. And again, people just questioning whether I should be participating in it. So yeah, it's security is a huge piece, and it's not just the big headline things that I talked about, the Ronin hacking,
Mhm.
the checks a lot, but there's smart contract exploits happening all the time, phishing attacks, people losing keys that just happen every day, and every little bit is ultimately it's chipping away at people's confidence. People are just worried, what happens if I lose access? What happens if I get hacked?
Yes.
Who do I go to? And I guess that's where security firms like us come into play here.
Yes, and
Um, Please.
I think you express the voice of the customer like very nicely. The other day, I was speaking with a friend, and he was like, I asked him, "Hey, are you investing in crypto?" He doesn't work in financial services industry, but he's close to the industry. And he was like, I used to, but then I got burnt. And then now I don't. And then you hear in the industry, basically, this company shut down. I don't know who to go to. So there's many questions and fears in people's minds. So one of those fears is basically losing access to the account as such. And even though it's, I think from a personal perspective, I think that's more of an early stage problem, early stage adoption problem. I think most of the solutions right now, it's designed such a way that you can recover access. But I'm not the expert. Over to you. What happens when somebody forgets the password or loses access
Oh,
to the device?
yeah. What happens when you lose your password or device? Yes, it's right now. It's not a good situation to be in. It's a real common fear, and honestly, it's totally valid. I think unlike traditional banking, there's no forgot my password button in crypto, at least not by default, or and as we said, not right now. If you lose
Mm-hmm.
access to your wallet, whether it's your password or whatever it could be, or your device, effectively you could locked out forever. And I say that is from a position of understanding, but I think the whole market, even if it's institutions coming in, I don't necessarily think they fully understand genuinely. If you lose access, lose key material, there is no way back into this. There's no, you know, let's think of a locks, the equivalent of getting locked out of your house. Okay, I can call a locksmith to come along and help me open my door, but there's no crypto locksmith here. And if there is, it's probably a scammer, right? This isn't theoretical either. I think we estimate there's what 20% of all Bitcoin is lost.
Oh,
So we're
that's a lot.
talking, yeah. So we're talking billions of dollars here, just simply because people just can't access their wallets. And we've all heard some of these stories. I think that this back in 2012, there's a really well-known guy in the UK called James Howells, and he accidentally threw out a hard drive, and that hard drive had best part of, I think it was 7,000 or so Bitcoin on it. Can't do the maths fast enough in my head, but every time I do it, it's probably going to grow faster and faster. But ultimately, I think he was trying to get permission to dig up the landfill it was in. But I think more recently, he's had to stop that project of his. But that's a huge one, and that's not just for early adopters. It happens all the time to people, whether it's a small amount, a big amount. So yeah, the loss of access
Okay.
is huge. And I think we did a report recently, and it said like 1 in 2 people believe the solutions are urgently needed to prevent loss of access. For me, the underlying issue here is people are still so undereducated
Mm.
on how they can prevent loss of access and what the solutions are out there for it.
Yeah, I think this is a very big topic. So even though I said we would explore problems first, then solutions, I think here it's the right time to ask. So if it seems like this is a genuine problem, I wasn't aware that it's still a big thing. But then what is the solution? Because how are we going to get adoption if there's this fear of not being able to get into your house? I love the analogy, by the way.
Yeah. What is the solution? I'd say that there's, ultimate CoinCover is one of them, right? In terms of security firms like us. But I think it's education is a huge part of it. For me, that it's the underlying way digital assets technology is built. There's always going to be key material that needs to be solved. Now, that's not for me, it's not for users to deal with that problem. that's for us as security firms, us as infrastructure providers. So when I think of infrastructure providers, I'm thinking the likes of the Fireblocks of the world partnering together to work together where users don't have to worry about it, but it's really simple for them. So for me, I think there's an education piece for now to understanding there is that risk there. Technologies like us and others who can then say, hey, we have an ability to help you back up that. But ultimately, we need to keep working to a world where that problem doesn't even surface. If you use the example of traditional banking, I trust a traditional banking world, and you don't question it, because when you deposit you deposit your salary in there, it's a bank, it's safe. You don't even need to know how it works. You just trust it because you understand that they adopt the right technologies to mitigate that risk. Yeah, but let's not forget that the crypto world is still very early, its infancy. It will evolve. There's been massive strides in the past 2, 3, 4 years of improving that, and it will continue getting better. And as we just keep learning from different threats we see and what we see in the traditional space and bringing that forward, I think in 5 to 10 years' time, it'll be a lot simpler.
So when you say education is a key part, I'm always like not surprised, but it's like when I speak with people from different parts of the world and different parts of the ecosystem, education always comes back somehow. And even like now that it's not financial literacy, it's education about it's education about how to keep your account safe. Or what type of education do you mean in this case?
I think it's a little bit of, I think it's a bit like, I guess, in the traditional financial system where there's a lot of education around how not to be scammed, be careful being scammed. So I think there needs to be, don't get me wrong, there are lots of great exchanges today who are doing that and actively trying to help and explain what the risks are around there. So I think we need to keep doing that, and that will help. But the underlying problem still is, though, we shouldn't have to educate people. It should be a world where we can make that technology so straightforward that I don't even need to worry about it in the first place, because it's just a given. If I use your platform to store my crypto as a bank, I trust you as a neobank holding my fiat currency. So therefore, it should be it should be the same. There's no difference. So I think it's a technology side that also needs to evolve for it. So yeah.
Yeah. So I'm going to stack the problems now. So when it's, hey, customers have this fear about losing access to their account as such. But then the next fear is that the exchange gets hacked as such. So tell us more about that problem, how it happens, and what's the impact on customers.
Yeah, good question. Sadly, I think that it's a matter of fact that exchanges get hacked, no matter how strong their security measures are. At the core of it, they happen because the exchange, especially the centralized ones, they hold vast amounts of crypto, which of course makes them high value targets. Then a very small slip in how they manage keys or internal controls, a small issue with their infrastructure, and then suddenly just some small vulnerability there then just means their assets exposed, and ultimately the worst case impact is then their users lose their funds. And you see that. I was thinking this morning about some examples of some of the exchanges. I'm sure listeners have heard of these, but for those who haven't, it's worth reading up about them. But back in February, Bybit, huge, really well established, credible exchange, that they were hacked by what we believe is Lazarus Group's South Korea, and one of their wallets was compromised by a really highly sophisticated exploit, where ultimately the end result was they managed to siphon off best part of 1.5 billion worth of digital assets, right? It's just mad. But I think in terms of talking about learnings and how we educate the market, they had a really good textbook crisis response to it that, they learned from things like FTX, make sure they had the right reserves in place. They assured all their users that their funds were safe. These are all things to help build that trust and make sure that if there is a hack, how do we respond to it? And launch bounty programs to help trace the funds. I think the interesting piece on Bybit was, though, as a community, as crypto players, they all came together to help Bybit because it was in everybody's interest to maintain market credibility. It's not, it's no longer about competition. it's not a good thing to leave Bybit and go, hey, that's your problem now. Means, hey, I'm going to now benefit from this because there's no benefit to anybody. Everybody, you saw it all the vendors were coming together. We must stop this and make sure it doesn't happen again because it's our industry. And if we don't do this, we're going to go back again another 2-3 years, that'll be tough for the industry. I knew that with I think there was recently a Coinbase attack. I think it was in May where I think hackers managed to bribe some employees to access some sensitive data. So different type of hack in that sense. I think very few number of users was impacted. I think it was like less than 1%. So very minor in the grand scheme of things. And I think the hackers were just saying to put a ransom out there, just refused to pay themselves. And they ended up putting a bounty out for people to go find out who the hackers were. And they recompensated any user that was impacted by this. There's lots of things happening in the world, but we're all learning.
Oh, this is very interesting because these are kind of use cases that we do not hear about in the traditional banking or traditional fintech. So it's like the whole industry is changing. Not it's just like crypto. It's like how the industry collaborates within the ecosystem.
Yeah, definitely. I think you see it more probably in the crypto space that people are trying to help each other because we can only grow that way by supporting each other, sharing those learnings. And there is competition, but there's also an element that it's important to grow this space sustainably.
I like that. Yeah, because you say, it's competition, but it's collaborative at the same time. It's a healthy competition, it's teamwork across multiple companies.
Yeah, definitely. I think if you think the name escapes me, but there are as exchanges and vendors, there's like scam communities where if they see fraudulent addresses, everybody puts this information together so we can all benefit from that because no one wants bad actors in a space. So yeah, it's definitely a collaborative space. Competitive, nevertheless, but collaborative.
Yeah, that is positive. So, if we put ourselves in the shoes of our listeners, that it's neobanks / the founder, CEO, the CPO, people like me and the team. And then if you are a traditional neobank, as a company, there's no expertise in the crypto space as such. But then it is likely that for some neobanks, crypto or stablecoins is in the roadmap or at least in the vision. And while we're in the industry of protecting people's money, we're also in the industry of managing risk. So what are the risks that CEOs, executive teams, product teams need to be aware of when it comes to building a crypto offering that probably they are like, they have not even realized how big is that risk?
Yeah. I think you're totally right in saying that fear is really real because we talked to a lot of neobanks and of course they're all interested in offering crypto service because clearly there's customer demand, the other products much more commoditized. So you've always got to find different services here. But as you said, I think most CEOs and execs, they just don't know what they don't know, which is the scariest part of all of this. Of course, they all probably come from trodden paths from the traditional payment space. But when it comes to crypto, it's completely new to them. And at a starting point, you probably don't even have any crypto expertise in-house to be able to even give you. Maybe you might be lucky to find some engineer in the back room somewhere that understands it of one of maybe 1,000 employees. It definitely keeps them up at night. So I guess in terms of the conversations that we're having with neobanks and some of the common themes that come up, I can only really talk about things that CoinCover gets asked in terms of our segment here, but the questions they're asking is how do I protect against the loss of funds, whether that's their corporate wallet or their end users' wallets, if they want to offer wallets out that way? How do they make sure that their users don't get scammed into sending funds to illicit actors? How do they keep up with regulatory changes? What do regulators expect? And then we also constantly hear that neobanks tend to want to streamline their operations by saying, let's reuse our existing security features because that'll work. Yeah. We see it all the time because they think because it's a pilot for them. So let's not spend too much money on it. Let's just reuse what we can because we don't want to spend millions on this and we get nothing from this. But the challenge you have is that these security features just don't transfer into the crypto world, even though it might seem more cost effective, but it doesn't do what it needs to do because the world of crypto is much more complex, as we said here. So it's not worth taking those shortcuts. But ultimately, if a neobank gets it right, the rewards are going to be really lucrative for them.
Okay, I think I think you raised a good point, especially this one at the end that it's like, hey, can we reuse part of the partners that we have as a neobank? And it's aren't they getting into Web3 now? So that's like a thought, right? Oh, I'm sure just like we're trying to get into Web3, maybe they are.
Yeah.
But then you're saying, hey, the core infrastructure of a traditional banking partner, let's say, it's not the same as a Web3.
No, exactly. I think I think I guess if to make about CoinCover, we'd recently had a conversation with an asset manager and that they came to us and said, okay, cool, we're looking to see how we can use you to back up key material. But hey, why can't I use someone? I could use someone else that I already use to back up other things as a business. I was like, sure, you can, but have they done this before? Do they understand how to handle cryptographic material? No, but it's cheaper and easier. I've done the due diligence already as a bank because of course we know due diligence banks takes a long time and processes. I can go to market quicker, but okay, but if disaster hits, do they really understand how to do it? Because I don't think they do. And then through that conversation, transpires, of course, they agreed and they work with us. But I think that's why you just can't. There are certain things, of course, that can transfer straight over, but there are a lot of things that they just need to make sure they're speaking to the right providers and just learning and what the right tools are.
Yes, I want to pause and say, hey, you used the phrase when disaster hits. But at the same time, previously you used the words, hey, you're going to invest millions. So I want to start with that. It's as neobanks, when we start looking at rolling out crypto features proposition, you look at it and you're like, whoa, exactly. It's all this infrastructure, it's all these partners. I need to onboard all these new partners for the capabilities that I need. And then the question back of our minds is, are we ever going to make money out of this, or is this just going to be a very large expense? How do we make this work? I'm assuming it's just a volume play. How do you answer that question? I'm sure your customers have that question as well all the time.
Yeah, it's a really hard question to answer, but I think how are you going to? I think everybody wants to play in a space, but I think you've got to find the right reason to do it. So for me, I think for neobanks specifically, I think it's a really big opportunity for them because they already have existing customers that are using them, that trust them, that naturally, as your what we call normies, your friends down the road, I just want to go on to my neobank app and I'd love the button that says trading crypto because I instantly already have the trust there. The likes of Revolut. I think Revolut in some circles get a bit of bad rep, but for me, in terms of the experience of Revolut, is great because they already have the customers. Those customers trust Revolut, and they create a really successful crypto platform on the back of that. So for me, and clearly they're making a lot of money from there. So yeah, I think you've got to have the right to be able to make money from the right reasons to do it. I don't think you should just launch something just because you think it's if you just want to launch a wallet for the sake of launching a wallet, do your customers really want it? I think you've got to do a lot of research with your customers. Do they really understand it? Is that something right for them? Is your target market the right audience to focus on? Because if their demographics are older, then it might be that they don't want to frequently trade, but they might say, actually, I'd like to be able to potentially staking because for them, I just have a little bit of money that I just want to pop in there. And over time, that just grows. Whereas maybe certain generations will go, I'm happy doing trading. So I think it depends on audiences and use cases there.
Yeah. Oh, you raised another very good point. If I come back to purpose-driven fintech, it seems like for fintechs, one as an industry, and same for Web3, part of the purpose is accessibility. And then I believe that the crypto space, yes, people have had access, but it's people at the top of the pyramid or the upper part of the pyramid. So how do we ensure then that now that you're talking, hey, older generations, it's like, hey, we treat them in a way. But what if we want to give access to people in the bottom of the pyramid to crypto? Could that be like, how do we make that profitable? Not profitable, but
Yeah, I guess as your broader question, how do we make it accessible to everybody? I guess.
yes, I was struggling to put the question together. Yeah, how do we make it accessible to everybody while making it work for neobanks as such?
Yeah, I think it's an interesting question because actually, in terms of real use cases, I think in certain regions, we're talking just off air, how you from Mexico originally, like LATAM's a really good example where actually crypto is pretty accessible to just simply because of the dynamics of inflation.
Okay.
That people are for me that there's a huge broad range of spectrum of people using crypto today because in their eyes, in certain countries, it's safer to put it in there because maybe they may not trust the government for argument's sake, or the inflation of holding their salary in stablecoin versus their own currency is much better.
Yeah, because it devaluates all the time.
Exactly. Or so for me, and then you go to other countries around the world where there's no cash is limited, there's no cash ATMs, and people are already using their mobile phones to move money. Again, crypto is another mechanism. Just most people have a phone and they have signal, and just through that, then you start with commerce very quickly. So I think it's accessible that way, but I think there's a lot of education to teach people how to use it. But I think a lot of the developing countries are already using crypto pretty well today.
So it may be not an equalizer, but yeah, it gives you access to other currencies that is not your national currency that continuously devaluates compared to 20 years ago. Let's say when I was growing up, it was hard to get access to USD unless you had cash in hand or you were rich and you had to go to the US and you were able to open a bank account with it. No, but that was like you were at the very top. Otherwise, you just have cash in hand, you get your dollars. But now that's changed. Cool. Okay, so then I want to come back to then you said, hey, what happens when disaster hits or something along those lines? So, yeah, what happens when disaster hits? You guys talk about layered protection as part of your core proposition. Can you explain to us what that is?
Yeah, so we can tell more about layer protection. So layer protection, sometimes called defense in depth. It's really a core concept in crypto security because, especially for institutions, it basically means you don't rely on a single line of defense. Because if one control fails, the whole system could fall apart. If you want me to illustrate it, think of an onion, just different layers of an onion and making sure there's layers there. So instead, you stack multiple independent layers of protection so that if one layer is breached, others are still in place to keep the assets safe. Today, I think the most mature I think today all mature financial systems have operated like this for decades. So back on my comment earlier around learning of the crypto world is we're learning, and as more people from like myself have come from, I guess, the traditional payments world to move into this space, educating history over time, it will get better and make sure that processes are there. And this led approach is what we're trying to help to bring into the space at CoinCover. I know you could probably break that layer down to probably three main layers. Certainly, you've got your technology infrastructure layer. So this is like stuff under the hood, multi-sig wallets, MPC, so for MPCB, multi-party computation, where no single person or system holds a full private key. It includes things like hot, warm, cold wallet segregation. So hot being online, cold being offline. So only a small proportion of assets are exposed online at any given point. And then there's things like encryption, sharding key material, anomaly detection. So all these things to help make sure that we can detect things early. And then you've got like operational and human controls. So you can have the best technology in the world, but if one person can approve a large transaction on their own, you're still exposed. So, we're helping institutions play things like role-based access, multi-person approvals, and segregating those duties so that moving funds requires multiple checks in place. But it's important that when it comes to layered protection, you've got strong training in place, background checks, and having the right incident response plans. Again, no different to how you operate a tech business in a lot of your circumstances. And then as a final piece, which is still evolving as an industry, but just making sure there's the right financial protections in place. So I guess the safety net, if you want to call it that, where if something does go wrong, the right insurance is in place, the right level of reserves as per different regulation around the world is in place, compensation structures are in place for end users. So ultimately, when you put all of this together, that is got layered protection where there's lots of different lines of defense in place to make sure that at the core of it, the assets are protected so that the worst case scenario for end users doesn't happen. So yeah, that's what, when we think about layered protection, that's how we're thinking about it.
Yeah. And I think if I put myself in the shoes of product teams, I think there's, just like customers have fear, I think product teams may have, it's not fear, but quote unquote, some sort of imposter syndrome, self-doubt. Oh, I don't know because it's crypto and I've never worked on that. But it's more of a, hey, remove that thought and instead think, how do we do it in the traditional world? And you use the same principles. It's not that different, actually. It's, hey, you need to have your security, your layer, that nobody, one person can sign everything and just approve action. So it's reuse the mental models of traditional banking, let's say.
Yeah, definitely. I think if we talked a little bit about earlier about people and banks not having expertise. I think it's really important to bring in expertise on the crypto space, but also the crypto businesses also, that start as crypto native are also bringing in people who've worked in the traditional space because they understand there are processes, there are some things like SOC 2, ISO standards, all of those are really important InfoSec policies that are there for a reason that absolute crypto native businesses should be adopting, again, as part of that layered defense mechanism.
Yeah, I like that. It's the best of the two worlds working together.
Yeah.
So what happens if a customer properly loses access to the wallet? How can CoinCover help?
Yeah, if they properly lose access to it. So I think, for me, as I said, we pioneered the space for disaster recovery back in 2018. From a CoinCover perspective, we can work with institutions and retail users. In terms of how we do this, typically with institutions, we'll work with them directly and through an infrastructure partner like Fireblocks, BitGo, Utila, and the others. From our perspective, how we operate is that crucially we're non-custodial, so we'll make sure that we back up the key material, but we can never access or move someone's funds. So we partner with you, but we can't touch any of the funds in there. It's really important because if we could, we'd add another vulnerability to you as an organization.
Yeah.
Yeah, the setup is different. So I talked about multi-sig, MPC. And this is part of the problem, I guess, to a point that the complexity is that there's different ways to be able to create keys, manage keys. But ultimately, from our perspective, the core concept exists, which is that we can back up your key material and just make sure that whether you lose your keys or there's a problem, your infrastructure provider, we can get you back up and running as quick as possible to minimize that business interruption there. And yeah, that's how we're operating.
Okay. So if I am a user and I reach out to my customer service in a neobank and I'm like, hey, I lost access, then how do your services help neobanks help their customers in this case?
Great question. So if I answer that question in the sense of what happens today. So what happens today is if you go to just generous as an industry, if I lose, let's say I've been scammed and send funds to whoever, you probably, the first thing you're going to do is you're going to go to your exchange and say, hey, I've lost my money. Can I have my money back? Unless the exchange is being kind, you're probably going to get the answer of, sorry, that's your problem. We put the processes, we tried to tell you, and we've also informed you that this is your responsibility. I can't help you.
Yeah.
So that's what's happening today for a lot of organizations out there. And it's a huge headache because if I think of an exchange, if you could look at the support tickets they get through, I'm certain that the number of support tickets they get through people saying I've lost funds and they're just having to repeat the same thing over and over again probably cost them a huge amount of money just to run a support team just to answer these questions. And you hear this from exchanges today. And it's just a cost center at this point. There's no value added to an exchange answering this question. So I guess let's think about how, from a CoinCover perspective, what are we doing here? So one of the solutions that we've released is a fraud protection solution, which ultimately helps to screen transactions at the point I'm sending out crypto to another address. So let's pick myself, Anthony. I'm very kind. I'm going to send a Bitcoin to you, to you, Monica, because you told me this is your address. Turns out, Monica, you're not who you are, and you've been scammed by somebody else who's pretending to be you, and I've lost a Bitcoin. If our technology should pick up that it's not Monica, and when it does, it'll say, hey, stop, don't send that transaction because it's not safe. But there is no tool in this world that is perfect. There's no fraud vendor will ever tell you that their solution is 100% accurate. And if they do, they're probably lying to you. So for us, one of the things that makes our technology unique is saying, if that scenario does happen, though, where our technology didn't spot that it was fraud, we can then put a layer on top, a what we call a warranty on top, which effectively allows the user to be able to be compensated for that. Let's say $1,000 in fiat that I've sent, I could potentially claim back the $1,000 there. So going back to the scenario at the beginning, the scenario changes to being, oh, I'm Anthony, call center. Oh, I supposed to send Monica, got scammed. Oh, cool. We've seen that JS systems mean that you're eligible for this. And now rather than saying, no, I can't help you, there's potentially some sort of recourse here that I can help you. And that really then gives trust back to the market.
That is super cool. Because that is, if we put it in the traditional world and we look at card payments, that's what makes Visa and MasterCard, well, the schemes. That's what makes the schemes powerful. That's why sometimes you pay with card, because then you know that there's the disputes process. And then if it's scam, then you're protected, and then they will pay you back.
Exactly that. So before I joined the world of crypto, I was specialized in the e-commerce card payments world, and that was that's what gives protection and confidence to users. And if I use my card, and for whatever reason someone steals my card details, I don't worry about it because I know within reason, I'll just go to the bank and they'll go, okay, cool, yeah, I'm held accountable to have to make sure I look after you because our technologies as a bank didn't spot that. Of course, it's a bit more complex. We don't need to talk about in this particular podcast, but principally is there's someone, liable for that to make sure that the user is made whole again.
And then sometimes this question comes to my mind during podcasts so much because then my work brain comes in and then it's, but then if I were at work at this moment, my next question would be like, but how expensive is this?
Yeah, no, it's obviously there's commercials to everything, and we work with our partners to make it worthwhile. But ultimately, you have to think about the cost of, for us, the way we use it. When we think about the ROI, we're not going to be the fit for everybody, but you've got to think about the ROI here. It's like, how much money are you spending on the operational side of managing these requests? Because these people, if they lost $1,000, they're going to be relentlessly contacting your support centers. So that's cost there. Then there's probably going to be negative reviews on your exchanges. So how much does that cost you of new people not joining to your platform? And then, okay, if you have gesture of goodwill payments that you want to offer out, you're going to have to leave a bucket of funds that sit there. What is that? What does that look like? When you stack all that up, the cost of a CoinCover or similar solutions, it's nothing, because ultimately protecting against fraud is the most important thing, because if you don't stop that, it'll kill trust and they'll just move to the next exchange because they feel that's more trustworthy.
Yes, definitely. I think we've been in a journey, right? But I think basically we ended up in a very specific use case that it's like, oh, that's extremely valuable in your proposition. That it's, hey, if customer loses money, it's the analogy of the cards.
Yeah.
Basically,
Exactly.
Customer is protected. The bank has a way to protect itself. I may use a wrong terminology, but it seems like it works like a quote unquote insurance, right? So it's like the bank is protected, the customer is protected. I paid something to be protected.
Yeah, exactly. If you want to keep it simple, yeah, it feels that way. To be clear, we're not an insurance provider, but that concept is similar. And just to just while we think about this, and one of the reports we did recently said 79% of users that we surveyed believe that crypto platforms should offer some form of mandatory compensation scheme to cover investor losses. The market's asking for this. And this is not just me and you talking about it. This is a lot of people saying that it's something that they would help them build trust and invest more into the space.
Yeah, it's a very strong stat that says, hey, the market is asking for this, consumers are asking for this. Therefore, we're having this conversation.
Yeah, exactly.
Yeah, definitely. So, as we are getting towards the end of the chat, what is like your top 3 key takeaways that you would tell any neobank team thinking about getting into crypto space?
Yeah, so I think I'd say if you're getting into it's a good, please do get in the space. It's a really exciting space, first and foremost. It's scary, but it's not as scary as it seems. Just, I think it's the scariness comes from not knowing. So it's my slight unfiltered thoughts there. But if you really maybe think of 3 things, I'd say start by choosing the right partners. You don't need to be a security expert. There's so many credible providers out there who can help you and take away that pain. Don't, as I said at the beginning, don't try cut costs at the beginning because it is complex, and just accept that if you want to be in this space, invest in it, but the rewards will be there with the right business model there because there's already great infrastructures in place that can help you outsource the tricky things. So don't try do everything yourself. So focus your teams on building a great user experience. If most neobanks have a great app, focus on that, but don't try deal with things like wallet protection, fraud monitoring. Try to leave that to experts like CoinCover and the rest. These ultimately are the high risk areas that will expose you. And then we said the layered approach. So think in layers. Don't just have one line of defense. Safe setup doesn't come from just having one line of defense. Make sure lots of different lines of defense and controls in place, testing them frequently. So for me, they're the kind of 3 things that I'd be saying to a neobank if they're thinking coming into the space.
Awesome. I think it's very practical. Good.
Yeah, but it is practical. I think it's very easy when you think of crypto to overcomplicate things. Don't overcomplicate it. There are still some core parts of security that that you would think of trust space still transfer into crypto.
Cool. And I'm assuming you have clients across the world.
We do.
So
We
you
do.
can operate in Asia, Europe, Latin America. You covered the spectrum.
Yeah, absolutely. I said we best part of about 600 institutions around the world, and very fortunate to protect all these brands. And I guess if they like the world of crypto, everybody's based everywhere. So yeah, we've got customers in every countries. I wish you'd give me time to prep for this particular question. I could have found some obscure country that we've got a customer in, but I can't name one off the top of my head.
No, but as long as we know that it's because probably in the traditional world, when we look at a partner, especially neobanks that have presence in multiple countries, when you look at a partner, it's it needs to be a regional partner, or you look at partners because you've heard about them and they don't operate in your region. But it seems like within the crypto space, many of them exactly are global.
Yeah, exactly. I think specific to CoinCover, we as an organization are a technology business, so we don't need to be regulated. Of course, we partner with regulators to educate them, but ultimately we're not regulated, so therefore our technology can be deployed anywhere in the world today.
Amazing. Cool. Anthony, it's been an amazing chat. Thank you so much. And everyone, see you next week.